IAS Inventories, IFRS International Accounting Standard 2. What are inventories? Inventories are settled under IAS 2. IAS 2 is one of the oldest standards, which was issued in 2003, is in more or less in current form. IAS 2 defines the inventories as an asset that either are held for sale in the ordinary course of business, that all types of assets which are held for sale are considered as inventory. If occasionally you sold some type of property, equipment or car, that not belong to inventories, because occasionally sales are not in ordinary course of business. The inventories which are in the process of the production for such as sales. So all types of inventories which are under process for sales of goods are also considered as part of inventories. And also inventories in the form of material or supplies to be consumed in the production process or in the rendering services. As per IAS 2, all types of materials or supplies which are consumed in production process or for providing services are considered as inventories. So for classifying of your inventories, you should focus on their purpose. Merchandise or goods purchased for resale, for example supplies in the supermarket, will be considered as inventories. Merchandise. Production of supplies, all type of material used, i.e. lubricates, petrol, etc., all will be considered as part of inventories. Production supplies. Material as raw material, iron, glass, aluminum. What you need should be considered as inventories under IAS 2. Materials. Work in progress means half-finished goods, which are under process, are also part of inventories. Work in progress. Finished goods which are produced. All on these goods, you need to apply IAS 2. Finished goods. How to measure the inventories. The basic measuring rules for inventories are: lower of cost method, net realizable amount method. Measuring exceptions. There are only two exceptions where there are two types of inventories on which this rule doesn't apply. Producers of agricultural products, forest products. Mineral and mineral products. These types of two inventories are considered outside the scope of IAS 2. Mostly these type of inventories are also measured on the basis of net realizable value. Commodities dealers and brokers, they measures their inventories at fair value less cost of goods sold. For example, gold, petrol and similar. Measurement of inventories. Let's take a look about the cost of inventories. It consists of three elements. Cost. As per IAS 2, the cost of inventories is measured in following ways. Costs of purchase. Cost price of the product. Always import duty should be part of the inventory. Non-refundable taxes. Cost directly attributed to acquisition of finished goods. Like transport, less trade discount and similar items. So in simple words, for measurement of cost of inventories, we should need to take under consideration about all these types of expenses and discounts. The second element for counting the cost of inventories is cost of conversion. These are the costs which are directly related to the unit of the production. Direct material, direct labor, production and overheads, allocated non-systematic basis. The third element of counting the cost is that what we need to take under consideration is other costs. Here we include all other costs, only if these are incurred to bringing the inventories to the present location and shape. Do not include. This IAS restricts us that do not include the below elements while calculating the cost of inventories. Abnormal waste, material labor, and other overheads. Storage costs but include those necessary in the production process. If you need to store some work in progress before further production stage. If yes, then you can include these costs but not the other storage costs. Administrative overheads. Here, our general admin like accounting department etc. are not included. Selling cost. Cost measurement techniques. IAS to permit certain measurement techniques. Well, it is a simple method. For convenience to approximate cost of inventories. This technique is used when items are small and in large quantities and will be very impractical and difficult to decide the unit cost. IAS to permits to measurement techniques. IAS to permits to measurement techniques. Number 1. Standard costs. So instead of calculating the real cost of inventories, you can use standard costs set by some calculation or cost card or something similar. This method is mostly used by the producers of large amount of small items. The second technique permitted by IAS2 is retail method. Number 2. Retail method. This method often is used by retailers who have large turnover of inventories with similar profit margin and cost of inventories is calculated as selling price plus margin. Cost formulas. Sometimes you buy same inventories at same prices, and when you sell them then you need to recognize expense in profit and loss account. How much it depends. Number 1. Are the inventories not interchangeable? Number 2. Are the goods and services produced and segregated for specific project? Are the goods and services produced and segregated for specific project? If the answer is yes, in these type of cases specific cost formula is used, meaning that inventories are not interchangeable or you have specific project there. Then you need to account for the expenses of the inventories or cost of sales, i.e. the specific amount of cost. For example, let's say you deal in vintage cars. Vintage cars are definitely not interchangeable, very specific. If you buy yellow car for 100 and you sell later on for 120, then must you recognize cost of sales 100, which is specifically cost for that yellow car. If the answer is no, meaning that there is no specific project and inventories are interchangeable. You can use cost formula. Cost formulas. In other words, you don't have to search for a specific cost for every single small little product did you sell. Cost formulas are the goods and services produced and segregated for a specific project. If the answer is yes, then specific cost formula is used. As earlier explained about vintage cars, that's how this specific cost formula works. If the answer is no, then cost formulas is used for inventories costing. In simple, either you can use first in first out FIFO method you can use for cost counting. And the second method of product cost counting is weighted average method. If you want to know more about first in first out FIFO or about weighted average method, can find out lot of material under IFRS brief explanation. Here I have explained you would use cost formula when you have lot of interchangeable items. And let me to remind you, LIFO is not permitted by IAS to that last in last out. Last in last out LIFO method has been permitted by US GAAP but not by IFRS. You should use the same cost formula for all inventories with similar nature and use for the entity. Measurement of inventories. Net realizable value. Net realizable value (NRV) is counted like this: estimated selling price less estimated cost of completion less estimated selling cost. You need to make sure inventories in your financial statements are not stated above this net realizable value. So if the net realizable value is less than cost, if the net realizable value is less than cost, write down if NRV is less than cost, we must need to write down the value. Finally, IAS to prescribe when and how to recognize the inventories in the profit and loss account as an expense. This IAS 2 has also explained that how to record accounting entries when the inventories are sold. While recording the entries, then you need to recognize the carrying amount of goods sold as an expense in P&L, so journal entry is debit. credit. P&L cost of sales debit. Inventories credit. The amount is same the carrying amount of items sold. When the net realizable value is less than cost, the accounting entry will be like this. P&L write-down / cost of sales debit. Inventories allowance credit. When the net realizable value is more than cost, the accounting entry will be like this. Inventories allowance debit. P&L reversal of write-down / cost of sales credit. These are the brief notes of IAS 2 for your easy understanding. Thanks for watching. If you like this video, please thumbs up, share this video and subscribe my channel for more useful videos.